Christmas market view commentary for April 20th, 420. That might mean something to some of you. Anyway, I'm excited to get to talk again. My topic today, I know some of you have heard me say this before, and others probably not. It might be even new to you. But the topic I wanted to talk about is earnings don't matter. And you might say, wait, what? You guys plan all this protection and stuff around earnings announcements, and what do you mean it doesn't matter? That's true, but it's not the earnings themselves that make a difference. Some of you might be familiar with the efficient market hypothesis. The efficient market hypothesis says that all of the known information about a particular company, everything that's possible to know about them, is already factored into the current stock price. But then the second part of this is that the only reason that a stock price would change is because new information becomes available, right? And at earnings announcements, the number itself doesn't really matter what the earnings values are. The market doesn't really care about what happened in the past. The people who are trading this stock, they anticipate everything. They're guessing at what the future earnings are going to be and what's going to happen. And after every earnings announcement, you first get the values, the actual earnings, and then they have a conference call. And back in the old days, earnings reports were the big thing, and then it got to be the earnings estimates by analysts were important. And you've probably all heard this, the definition of an earnings surprise. I'm sure you've all heard about earnings surprises. What that is saying is the analyst was wrong. If the estimate was off, it's because the analysts were wrong about their estimate, right? And that happens constantly all the time. And then it became, investors are trying to anticipate what not only the analysts are saying, but there's this whisper number, and there's even a website called whispernumber.com. They just keep pushing further and further into the future and trying to further and further anticipate what's going to happen or what information is going to be released. And we have a perfect example of that right now in Netflix's earnings announcement. So let me pull Netflix up here. So if earnings mattered, when earnings came out and they beat estimates by a good amount, right? The estimate was 81.5 cents and the actual earnings were 1.23. If the earnings mattered, that stock should have gone higher, and it didn't. It dropped. And after people had time to digest the information in the conference call, it went down even further, right? So before the earnings announcement, we had some out of the money puts, and we were not expecting a bad conference call, but we had the puts on just in case. And so when the earnings announcement came out, Netflix busted, well, I'm not sure who busted what when, but the deal for Warner Brothers busted, and they were getting money back from that they weren't going to spend. They were supposed to be implementing a stock buyback program, but it's almost like they forgot about it. And then they didn't make any adjustments at all after the deal blew up. They just got this big pile of cash back, and they didn't adjust their future earnings. They didn't adjust their stock buyback program. They just kind of left everybody hanging on out there. And so the adjusted earnings that people were analyzing were showing that they actually missed on their earnings per share, even though they raised the prices of their service. So they're collecting more money, and they're just not giving us information. They're also in a conflict where the CEO is stepping down again, and he was kind of kicked off the board last time, and bad management, they ended up bringing him back, and now he's going again, and we're just seeing the results of the earnings call and all these other factors. Yes, so it's all these other factors. Everybody's constantly trying to guess at what future earnings are going to be and what the stock price is going to be in the future. And it is kind of dependent on what kind of earnings they're going to get, but the guidance didn't really change, and it just disappointed. It makes everybody feel like potentially the stock is not going to have good management in the future. It could go down. It could turn around and head back up with the new CEO. We'll see. We'll find out what happens with Harris off the board. I wanted to get this image up here. I talked to you a little bit last time I taught. I showed you this graph, and you can see that the expected volatility in the future, this green line, looks different than the blue histogram here of implied volatility. Right, so we got implied volatility is the green line, and that's what the market is expecting. The blue line is what the stock has actually done in the past, and that tells us that the stock makes bigger moves both to the downside and to the upside than the market is expecting. And that's really good for our strategy, and this tells us that the options are cheap. So what did we do when we got this? A lot of you guys have puts for protection out of the money puts that we had on before the expiration that are at the 99 strike. Well, these options are cheap enough. It's like, let's just double up. So now we'll make money to the downside twice as fast. So today we put on puts at the 95 strike. So if the stock continues to drop, it won't just be we're breaking even on the loss that the stock is having, but we're actually going to potentially make money to the downside on Netflix if it keeps going down. And that's our bread and butter. That's what we do, is we're figuring out how to make money regardless of the direction in the market, regardless of whether we're right or wrong on the direction of any stocks. We're all about protecting our assets, right? We're trying to make sure that we can make money regardless of what the market does. And the only thing that really hurts is sideways market, where nothing's moving at all. So we welcome big moves in the stock, whether they're up or down, and those earnings cycles that we go through, and why we add protection, and why we add protection in events. The war, right, has been, we thought last week that it was over. The market thought last week that it was over, and the market headed higher a lot last week. We were making some good money as a lot of the stocks started heading up, and then now it's going to be a deadline on Wednesday, right? Now we're looking at whether this some kind of a deal is going to happen by Wednesday. That's the target deadline that President Trump has talked about. So we'll see. I have no idea, but we'll keep and the top of the list right here, we've got earnings coming up on Apple. And I was really happy. I want to show you Apple, another trade that we're in. Apple crossed above the 50-day moving average, is heading higher. And today we put on a 270 put just to protect. So we're kind of getting close to where we're getting some resistance up there. And I'm really happy that we added that 270 put before the announcement that Tim Cook is not going to be the CEO anymore. They've got a new CEO coming on board, and we have no idea what he's going to. There's going to be a level of uncertainty. We can probably go check right here. Let me go to finance.yahoo. And I like that finance.yahoo will give you after hours. So yeah, it's down after hours. So after hours, stock's down a little bit. We have the 270 strike. We'll see what happens tomorrow when it comes up. A lot of it depends on as information comes up. We know that the chair or the new CEO is he comes from the hardware side. John Turnus is going to be the replacement, and Tim Cook's still going to be around. He'll be like an executive chair, but not the company's CEO. So he'll stay on board and help through the succession. And the transition to the new CEO doesn't happen until September. But now everybody's scrambling for information about Turner. What was his name? I just blew it off again. I don't even know him. Turnus. Everyone's looking into him to find out to try and predict what he's going to bring to Apple. But sorry about that. I'm just I forgot to put this in focus mode. Anyway, so I was really happy that we had made that position today, and we did it before the announcement. So we're protected at the money on Apple, and we'll continue to do that. We have earnings coming up there. That'll be interesting. End of the month, we're getting closer to that. You can see a lot of these earnings are going to happen pretty soon. So we're protected very well. We like how we're protected. We're protected not just because of earnings, but also because of event risk with the back and forth and sentiment on Iran. Here's our big picture commentary, and it's really just talking about the risks involved. And it's really funny because everybody thinks that if the war is over, then it's going to be going back to exactly the way it was in the past. I don't know if I believe that we're going to go back to exactly what it was in the past, but we'll keep watching it, and we always do. If the war ended tomorrow and they did come up with some kind of a peace agreement, we'll see what happens with the Strait of Hormuz and all that kind of stuff. I'm not 100% sure how all this is going to play out. Trump is talking in the market. He's trying to move things and kind of trying to pressure Iran into doing exactly what he wants them to do. So, and I guess that's what you always do, right? So we'll see if he can get it done the way that he wants. I don't think he wants to be in a war. I think he wants to just make sure that they don't get a nuclear weapon. And I think he also wants the Strait of Hormuz to open up and let things go through. But I'm not sure. So we'll see. oil prices, mean inflation for everybody else. So, and inflation is only, and so here's the thing too that I want you to think about. Inflation is actually good for the stock market. It's not bad until the Federal Reserve starts to fight it. If the Fed starts to fight it, it will hurt the market. But stock prices inflate along with everything else. So if everything else keeps inflating, then the stock market we could see huge ongoing bull market as soon as this war is out of the way, kind of stuff. So, but here's the briefing.com, where our market's going to end by this week. We're bullish. This is Dow Jones Industrial Average. It's climbing. It's not back. It hasn't reached new highs yet, like the S&P 500 did. SPX crossed 7,000 new highs, onward and upward. Same with NASDAQ. And tech stocks have been launching. That we had a great week last week, and we were positioned right. We feel like our positions are all good. We have some earnings coming up. Tesla is a big one. United Airlines, United Health, quite a few. Intel's not what they used to be. Lockheed Martin, that's one of, I know there's a few positions out there that some of you guys have. FCX, I like FCX, and commodity prices, if they continue to rise, then that'll be good. FCX is a copper producing mining company. So news that we have coming out this week: pending home sales tomorrow, business inventories, retail sales. The Senate Banking Committee hearing starts tomorrow for Kevin Warsh. He's the selected new Fed chair, and unless something really bizarre happens, unless we find out that he's also on the Epstein list, I think he'll probably get through. So we'll see how that goes. We'll see how that goes. But unless something really bizarre happens, I think he'll probably be confirmed as the new Fed chair. On Wednesday, we have the EIA petroleum status, and we also have the deadline that Trump wants to have a deal made for the war on Iran. So do we start blowing things up in Iran again on Wednesday evening? I have no idea. We'll find out. My gut says probably not, but it's unpredictable. I'm not willing to bet on it above a 50-50 coin toss. But I think in terms of risk, reward, and probability, and I don't think that there's anybody out there that can give us a solid estimate other than people that are inside. And so we'll find out. On Thursday, initial claims, jobless claims, and we have EIA natural gas report, which I'm guessing it's going to be bad. Same with petroleum status. And then on Friday, consumer sentiment. So those are things that we're going to be watching. Anybody have any questions? Just waiting to see if you guys have any questions. We're watching all of these stocks, right? We're keeping an eye on it every day. The nice thing about what we do is we don't have to be right on direction. We can be wrong and still be profitable. And where we own these stocks, we can make adjustments to our risk reward profile by using option plays. And when it becomes obvious that the stocks are potentially headed down, we can double up on puts when they're cheap and make money even to the downside. So we'll continue to do what we do. All right, no questions. All right. Yeah, we're really happy with where we are. Got, and even on a day that was kind of bad, Meta going down 17. I mean, Meta can move every day. It can move that far every day. It's not that bad, but we have still a lot of green on here. On some of these positions, so we're still very positive about our holdings, and we still believe that there's a lot of room to go in most of those assets, and we'll continue to play them for big moves in the future. All right, no other questions. Yeah, you're right. It was a good recovery. Thank you, Nathan. Yes, good question. Thank you for reminding me, Nathan. Have we been able to add more shares? We actually, so far we've added some shares on Key Corp. We added some shares on Ford. I'm not sure everywhere else, but I know those two we have, yes, and it is holding up, and so we should make money faster to the upside as things bounce back. I think we've been adding shares on a lot of these positions for a lot of people over time, and so yes, it is holding up. When the market goes down, we get a dip, we're able to add more shares. So yes, it is holding up. That theory. Good question. Dollar cost averaging, exactly. Yep. And we're still looking for other opportunities too, right? So we're always looking for something, and making adjustments as we go. We don't just blindly invest in all the Mag 7 stocks, but those that are undervalued, that have a lot more potential to continue to run, we dive in and manage the position as we go. So you got it. All right. Well, if there's no other questions, I'm going to go ahead and let you guys go. And we'll be back again next week. We'll find out how things go with the Iran stuff by Wednesday, right? So we'll continue watching all that. We have to figure out this Warsh character, Kevin Warsh, the new potential Fed chair. If he gets confirmed, then everybody's gonna immediately jump all over him to try to figure out what his strategies are leaning forward, going into the future, and what changes he might deal with as the head of the FOMC. So we'll see how that plays out. That just gives us another thing to look at and study, to find out. So we'll continue to play along with everything else going on and stay on top of everything. So, alrighty, I'll let you guys go. I hope you have a wonderful week. We'll see you next week. Bye-bye.